Today we'll be starting with the part 3 of mutual funds chapter, that is returns from mutual fund. Okay, so we have already seen this in previous parts also, in NAV part also. There I have just explained it to you in logic. Okay, now we will see how to calculate with the formulas. Okay, with the actual formulas, how to calculate it, we'll see. Like formally, I'm going to explain you how to calculate holding period return or annualized return or return from mutual fund. Okay, so let's see, it's very much logical. It means total return in percentage earned by investors or unit holders from mutual funds throughout the period of their investment. Okay, holding period return means what? The period, the time you are holding the return, sorry, the time you are holding the mutual fund. Let's suppose you are holding it for 5 years. So what will be my holding period return? My holding period return will be for 5 years. Okay, throughout the period of their investment. Okay, my holding period return will be of 5 years and not just 1 year. Okay, calculation of holding period return in case of dividend payout or regular income plan. Okay, dividend payout is also called as regular income plan. Okay, holding period return is equal to total yield or profit. Okay, total yield or profit divided by investment value at beginning. Okay, so it can further be um, divided by this, like this, is equal to investment value at end minus investment value at beginning plus income received and capital gains distributed divided by investment value at beginning. Don't you see that this is somewhat similar that we have studied earlier in portfolio chapter? Okay, there we used to calculate return of security. X is equal to D1 plus P1 minus P0, right? So it is the same, your dividend or income received plus your P1, that is your investment value at end minus your investment value at beginning. In case of dividend reinvestment plan, bonus plan and growth plan, what we do, this was a dividend payout plan, that is the regular plan. Okay, in case of dividend reinvestment, how do we calculate it? It is, see, this one is very much important. Look at it. Holding period return is equal to total yield or profit divided by investment value at beginning. Okay, now you might ask me what is new in here. Okay, so total yield or profit is, it is the same formula. Okay, it is the same formula, but here total yield is equal to investment value at end minus investment value at beginning. Okay, there is no concept of dividend here because dividend is not paid out. Okay, so now how do we calculate investment value at end? Okay, see this, investment value at end is equal to number of units at end initially purchased. Okay, initially purchased plus units received under a dividend reinvestment or bonus plan into NAV. Okay, so how do we calculate this is that it is dividend reinvestment plan, right? So let's suppose you got 10,000 rupees as dividend. Okay, divided by the total the NAV. Okay, NAV which will be given in question, or just take latest NAV. Okay, so that will be added to the investment value at end minus the investment value at beginning. It is number of units at the beginning into NAV at the beginning. If issue price and repurchase price is available in question, then these will be used instead of NAV in above formulas. Okay, if issue price and repurchase price is given, then use that and not NAV. Next, annual return or annualized yield or average yield or effective yield per annum. Okay, so everything means the same, annual yield, average yield or annualized yield, effective yield per annum, it all means the same. It means what? That annual return is equal to holding period return into 365 divided by number of days or month for which the investment is held. Okay, let's suppose your investment was held was your holding period return is for 5 years. So how do you calculate it? So holding period return for 5 years you'll take, let's suppose it is 200% into 365 or 12 months divided by the total months held. Okay, let's suppose it is for 60 months. Okay, 12 divided by 60 you'll get for 1 year. Consider both starting date and end date for calculation of number of days for which investment is held. Okay, consider both starting date and end date for calculation of number of days for investments held. Okay, you have to take the date on which the investment started and end date also. Okay, if you are calculating in days. Next, there is an additional formula here. Just keep it in mind. This was asked in a exam question. So in exam question, if they are asking real return percentage, okay, return in percentage you can derive. Okay, like this formula, with this formula or holding period return, you can get return percentage. But how will you get real return percentage? That is a serious question. Okay, so what is real return percentage? Real return percentage is that percentage in which you give effect of inflation. Okay, you give effect of inflation. So how do we calculate it? It is real return percentage divided by 1 plus inflation rate. Okay, divided by 1 plus inflation rate, which will be taken in decimals. Okay, let's suppose your return was in percentage which you calculated. It is, let's suppose it is 12%. Okay, your inflation rate is 4.5%. So divide by 1.045. Okay, so 11.48 is my actual percentage. Okay, it is my real return percentage. Okay, so that's how you should calculate. Now we'll see some questions regarding it. Okay, there are some good questions in the module. In the question bank, we'll see. But it is very much lengthy. I'll just tell you how to solve it. Okay, you can solve it. Our major chunk of this chapter is over. Okay, till 12th question it was the major chunk. It's over. Okay, NAV calculation was the toughest part in this chapter. We have done it. Now we just have to find the return of mutual fund under dividend plan, payout plan. 13 is very easy. Do it yourself. Okay, I've crossed it. Do it yourself. It is very much easy. You will be able to solve it. Okay, if you are not able to solve it, look at the solution. You will be able to grasp it. 14 is also easy. Okay, you will be able to do it. 15 also I'm not solving. It is very much easy. Okay, I'll just explain it to you how to do it. See, A has invested in 3 mutual fund schemes as per the details below. Okay, date of investment 1/12/11/13. Okay, and amount of investment is given. NAV at the entry date is given. Okay, so amount of investment is given and entry date is given 10.5. Okay, so I would have held how much? 4761.90 units of this share. Dividend received at the end is 950. Okay, and NAV as on 31st is 10.40. So what they are asking is, what is the effective yield on per annum basis in respect of each of the 3 schemes to Mr. A up to 31st/3/2025, taking the year consisting of 365. Okay, now they are asking in days. So how do we calculate this? Okay, so what they are asking is effective yield, that is annualized yield they are asking. Now we have to calculate. Okay, I'm holding 4761.90 units. Okay, what is the formula? It is D1 plus P1 minus P0, right? So I'll have to calculate P1 first. into what? Into 10.40 and 10.50 into what was my 4761 4761.905. Okay, 10.50 m minus 950 m plus MRC divided by 50,000. So I'm getting it as 0.94% for the holding period. Okay. So if I'm getting for the 0.94 for the holding period, so how much will I get it for the 1 year? Okay. So it is for how many days? It is for it was issued on 1st December 2021, right? So 0.945, keep it in mind. 0.9476, keep it in mind. We'll move. Okay. So how many days have I held it? 1st December it was issued. Okay, 31 days in December, 31 days in January, 28 days in February, 31 days in March. Okay, so 121 days I've held it. Okay, so 0.9467, right? 0.9496, right? 9476 something. Okay, into this is what? This is for my 121 days. So how much is it for 365 days? So I'm getting it as 2.8584. Okay, 2.8584. Okay, like that you have to do for everything. Okay, it is very much easy. You can do it. Next question number 16 is your homework. It is the same question. Okay, just figures have changed. Okay, so you can practice it. Question number 17 is homework. It is based on question number 18. I'll teach you question number 18. You'll be able to do question number 17. So how it is done, we'll see. Mr. D has invested in 3 mutual funds as per the following details. Amount of investment is 2 lakh, 5 lakh and 4 lakh. NAV at the time of purchase is 10, 25 and 20. Okay, dividend is given. NAV as on 31st 3 2025 is given. Okay, and annualized yield also is given in question. So what we need to do, we'll see. First, what they've asked is you are required to help Mr. D find out. Mr. D has misplaced some documents of the investment, so we are required to help Mr. D find out the following. What we need to find out is number of units allotted in each scheme. So how do we find out number of units allotted? It is 2 lakh divided by the opening NAV. Okay, so 2 lakh divided by 10 is equal to 20,000. Okay, like that for 3 we have to do it. Next, the value of investment as on 31st 3 2025. Value of investment. So how will we do it? Number of units. It is 20,000 into your NAV as on 31 3 2025. It is 10.5. Okay, so 20,000 into 10.5. I'm getting it as 2,10,000 is my value at end of the period. Okay, 2,10,000. Next, holding yield or total return on investment in percentage. Okay, so they are asking us total yield. Okay, on the investment. So what all information is given for us? Dividend information is given. Annualized yield is given for me. Okay, so I need to find out the holding period. Okay, so first we'll find holding period, then we'll get annualized yield, then we'll compare with annualized yield. Okay, first we'll find holding period return. So how much will it be? It is 3%, right? 3%. So 20,000 into 10 into 3%, 6,000 I got, and the difference in value, that is 0.5 into 20,000 m plus divide. My holding period return is 8. Okay, 8. My holding period return is 8%. So I'm getting it as 8%. Next, holding period of his investment in number of days as on 31st March 2025. So what it is asking is that holding period. Okay, now we have calculated return for it. Annualized return is given in question. Annualized yield is given in question. So can we find it? Yes. Annualized yield is for 365 days. For 8, how much is it? Okay. We'll simply do cross multiplication. So how do we solve it? So for 9.65 it is 365 days. For 8 how many periods? So 365 divided by 9.33, I guess 9.733. So it is 300 days. Okay, 300 days we have holding. So now they are asking the dates of original investment. We have to trace back to 300 days back. Okay, so tracing back 300 days is very much challenging. So what we'll do is that 365 minus 300. So we'll just calculate 65 days. Okay, from the start of the year. Okay, so how do we do it? Minus 30 days in April, minus 31 days in May, and 1 day in June. Okay, so my investment will be on 2nd June. Sorry, 65, no? 65 minus 30 days in April, 31 days in May. What is happening, man? 4, right? So 4 days. Okay, we have to 65 days is coming as 4. Okay, so 300 days, 1 day, the date of investment and the date of redemption should also be included. So plus 1. Okay, so 5th June is the date. Okay, next, assuming past performance of all three, will you continue for 1 year? Will continue for 1 year. What action should the investor take? What will be the expected return for the next year of the above action? For 1 year, if he takes, what will be the investment? So they are asking the expected return. Okay, if past of all three schemes will continue for 1 year, the investor should redeem the units of mutual fund A and B. Okay, if it is continuing for 1 year, we will look at the annualized yield only. So what is the most return we are getting? We are getting in mutual fund C. A and B are less. Okay, so we will redeem the amount from here and we'll invest in C. That is what is given here. Next, what will your answer as above point number 6 changes? If mutual fund charges exit load of 5%, if the investment is redeemed for 1 year. If so, advise the investor what and when the action to be taken to optimize the return. Okay, so it is charging an exit load of 5%. So what we'll do is that if mutual funds are charging exit load of 5%, if investment is redeemed within 1 year, then investor should get redeemed the mutual funds of B. Okay, B is the B car. Okay, because it is in negative, it is always to be redeemed only. Okay, it is to be redeemed of mutual funds B. And now and units of mutual fund after 65 days. Why after 65 days? Because we are holding it for how many days? 300 days. Okay, if we are holding it for how many days? 300 days. If you are going to withdraw it, what is the return now? 9.733. Okay, if you withdraw it now, how much return will get? -5. Okay, we'll get only 4.633. Since we are holding it for 300 days, just hold it for another 65 days. No, So if we hold it for another 65 days, we'll get extra 5% return. Okay, and the expected mutual fund C should anyways be withdrawn only after 15 days. Sorry, only after 365 days. Okay, so that's what the point said. Next, question number 19 is easy. Mutual funds written from mutual fund under direct reinvestment plan, bonus plan, and growth plan. Okay, so we'll see how do we calculate return from each and every of the scheme. 19 is very much easy. Okay, you can do it yourself. It is very basic. 20 is your homework. 21 is also your homework. 22 is a good question. We'll see. Mutual fund company introduces two schemes, that is dividend reinvestment plan plan D and bonus plan plan B. The face value of the unit is rupees 10 110 14 2020. Mr. K invested 2 lakh each in plan D and plan B, and when the NAV was 38.2 and 35.6. Okay, NAV is this much they are given here. Okay, so 2 lakh divided by 38.2. Okay, so how much is it? 5235.60 units I'm having. Both plans matured on 31st March 2025. Okay, so I'll tell you, this is a new question and it's a good question, so I'll tell you how to do it. See, first on 30th September 2020, dividend is being reinvested. Okay, this is plan D, it is being reinvested. So we'll assume that it will be reinvested at the NAV of the end. Okay, on the date of issue, on the date of dividend declared will be the date on which, on the date of dividend declaration, what is the NAV, will use that for dividend units to be calculated. Okay, so what it is, we'll see. Now it is giving 10%, right? So what was my investment? 5235.60, right? 5235.6 into 10 into 10% divided by 39.1. So I'll get extra units of 133.90. Okay, I'll add it with 5235.6, right? So if I add it at the end of the time, I'll get 5369.50. Like that for every period we have to do it. Okay, and at the end of the period we'll get a total maturity value minus the investment value, we'll get total gain. Okay, and for effective yield, what we'll do is that how much time are we holding it? We are holding it for 5 years. Okay, on 31/3/2025, for 5 years we are holding it. So up to that period we have to calculate. Okay, should I make it in calci only? Okay, I'll make it in calci. Okay, we'll just see. Okay, into 10 into 15% divided by 44.2 plus my earlier unit was how much? 5369.5. I'm getting this 5555172. Okay, it's very much easy. Okay, just follow the steps and you'll get the answer. Now it is for the total gain is 390317. It is my holding period return in value. Okay, now what we have to do is we have to calculate it for 1 year. So how do we do it? We divide it by 5. Okay, and we can take percentage of it. Okay, so 39,003.17 divided by 2 lakh divided by 5. I'm getting it as only 3.9%. Okay, only 3.9% from this dividend reinvestment plan. It was a not good plan. It was not good. Okay, this plan was not good. If we had taken it out at 1 year before, we would have gotten much more return. Next, bonus plan, how do we do it? See, it was valued for 35.6, right? So 2 lakh divided by 35.6 is the opening value. So I'm having 5617 units at the beginning. Okay, so how do we calculate bonus? We just simply do in the ratio, okay, into my total units 1 divided by 5. Okay, this is my bonus units plus my actual value. How much was it? 5617.98. So I'm getting it as 6741.57 as my end units. Okay, like that for every period we have to do it. And at the maturity value, multiply it with, and at the maturity value, multiply it with 31/3/2025 value 39.90. Okay, you'll get an amount minus your investment value, you'll get return. Okay, so how do we calculate return? 131 in percentage divided by 2.59 divided by 2 lakh. It is for how many years? It is for 5 years. So for 1 year, how much is it? I'm getting only as 13.12%. It is far better than your dividend reinvestment plan. Okay, it was a good question. Okay, so next we'll do is question number 23. Sun Moon Mutual Fund approved mutual fund sponsored open-ended equity oriented scheme Chanakya Opportunity Fund. Okay, there was 3 plans. Plan A is dividend reinvestment plan, Plan B is bonus plan, and Plan C is growth plan. At the time of initial public offer on 21/4/2015, Anand Bachchan and Charu, 3 investors, invested 1 lakh each at face value of rupees 10 and chose B, C, and A plan respectively. Okay, that is your dividend reinvestment, bonus, and growth plan. The history of the fund is as follows. Okay, now they have given here on 28/7/2019 they got their first dividend. Okay, till then no dividend was issued by the mutual fund. So for plan A is what? Plan A is my dividend reinvestment plan. So how do we do it? So how many units are we having? We are having 10,000 units. Okay, we are having 10,000 units. So 20% dividend was given into 10 into 20%, right? So 20,000 rupees I'm getting, we have to reinvest it. So what was the, on which rate should we reinvest? On the date of 28 it was declared. At that point, what was the NAV? We'll divide it with that by 30.7. So I'm getting it as 651.465. Okay, this is the total unit I'm getting plus 10,000. So I'll add it. So this should be my amount. Okay, 10,651.47. So this is my reinvestment plan. Okay, for that entire period we have to do it. Okay, now we'll read further. Okay, on 31st July, all 3 investors redeemed all the balance units. Okay, on 31st July, they have redeemed. Consider the following. Okay, this is very much important. We'll see. Long-term capital gain is exempt from tax. Okay, long-term gain is exempt from tax. Short-term gain is subject to 10% income tax. Short-term gain is subject to 10% income tax. That is within 1 year, we have to do 10% income tax. Securities transaction tax only on sale of redemption of units. Okay. When we are selling, we have to do minus 2%, 0.2%. Ignore education says calculate effective yield per annum of each investor. Suggest the name of investor with the highest effective yield per annum with the difference to his nearest investor. Okay, so we have to first calculate the annualized yield. Okay, for 10 years they have held it. Okay, for more than 10 years they are holding it. Okay, they have invested when? On 1/4/2015, but when they are redeeming it, 31/7. Okay, extra 4 months they are holding. So we need to calculate it. the annualized yield. So how do we calculate it? The first one I told you how to do it. For end of the period, we'll get an amount. We'll multiply it with the 31st March 2023. Okay, minus your initial investment. Okay, divided by your initial investment, you'll get your holding period return. Okay, your holding period return is how much? We are getting a net gain of 6,98,000. Sorry, the first one, right? We are having how much? 14,906 units. Okay, 14,906.16 units. Okay, we are having. Okay, we'll first do growth plan. Okay, sorry. Okay, we'll do dividend reinvestment plan since we have started it. Okay, so at the end of the period, that is 24/3/2025, I'm getting 14,906 units. Okay, so this is my final units. I'll multiply it with 53.75. Okay, this is the total amount I'm getting. Okay, this is the actual figure I'm getting. Now what in question they have told is security transaction tax has to be deducted. Okay, when we are selling it. Now we are selling it, so we'll do security transaction tax minus 0.2%. Okay, so this much amount I'm getting 799,603.68. Okay, now long term capital gain is nil. Okay, so is there anything in short term? The last dividend was declared on 24th March 2025. That is only 4 months back. Okay, so the units that I've gotten in this period, okay, that is how much? 1,144.43. This amount is short-term capital gain on which 10% tax has to be deducted. Okay, so how will we do it? Just simply 1144.43 like you do it in tax. Okay, into your redemption value into redemption value minus your issue price. Okay, this should be my profit into how much? 1144.43, right? So I'm getting the profit as 644.66. Okay, so now we have to calculate tax on it into 10%, right? So 646 is the amount. We'll do M minus. So this is my actual profit in hand. Okay, now we have to calculate return on it. So what was my initial investment? My initial investment minus was 1 lakh. So this is the actual holding period total return I have got. Okay, so divide by 1 lakh, I'm getting it as 698.95%. Okay, 698.95%. This is for how many period? This is for the whole period. Okay, now keep this in mind, 698.957. Okay, keep this in mind. We'll calculate the holding period. Okay, what is the holding period? It was issued on 1/4/2025. Okay, when was it matured? It was 31/7/2025. So we'll take up to 31st March 2025. The period is how much? 12 months into 10 years, right? So 2025 minus 2015 is equal to 10 years. Okay, plus how many months am I holding it extra? April, May, June, July, 4 months plus 4. Okay, so what was the return we got? We got the return as 698, right? 698.97 something we got, no? 969. 698 969.69 divided by 100. So 698.96 Okay, this was for the whole period into how much? Into 12 months divided by 124. So my holding period return should be 67.64. Okay, we have given every effect to it. Security transaction tax, okay, short term capital gain 634. Okay, every effect we have given here. So we are getting the amount as 67.64. Okay. Next we'll calculate for plan C. Plan C is very much easy. It is growth plan. Okay. So growth plan, what we do is that we invest the money, we forget about it. Okay, we forget about it, and we will because it is reinvested. The amount is reinvested in the funds only. We will not get extra units. Okay, only it will the NAV will increase. Okay, the NAV is increasing day by day, but I won't get any extra units. So 10,000 into 82.07. Okay, so I'm getting the total return of 82.07. Is there any short? Okay, minus my security transaction tax minus 0.2%. Okay, is there any short term capital gain? No, because he didn't get anything in between, only the initial amount. Okay, long term capital gain is exempt. Okay, so it is the total amount divided by 1 lakh minus what was my investment amount 1 lakh and divided by investment value. So 719.05 is my total holding period return. Okay, so I have to do it annualized into 12 divided by 124. So I'm getting the 69.58. It is better than a reinvestment plan. Okay, 59%. Okay, now what they have asked is for plan B, that is your bonus plan. How do we do it for bonus plan? So 10,000 units we had in the starting into 5 divided by 4. So I'm getting the bonus as 12,500 plus 10,000. Okay, so 20,500 I'm having it on 31st March 2020. Okay, since here it is given 5:4, it is correct only. So how do we do it? 10,000 into 5 divided by 4. Okay, we are getting 5 bonus shares for the 4 shares we have held. Okay, so I'm getting as 12,500 plus 10,000 my earlier units. I'm getting it as 22,500. Okay, so 22,500. Like that we have to do for every period. Okay, so here also on 24/3/2025, that is short term gain we are getting. Okay, how much we are getting, we'll see. Okay, 1/4 we are getting on that date. So we have to give effect for that also. Okay, so we are having how much? 37,500 as the total units. Okay, 37,500 as the total units into what is the NAV on 31st July? It is 53, right? Sorry, 22 into 22.98. Okay, this is the actual return he got. Okay, minus 0.2% security transaction tax. This you would have gotten on hand. Now he has to pay tax on it. So long term is exempt. Short term, how much is it? We'll calculate. Okay, so how much did he get for short term? See, he got 7,500 units, bonus units for NAV 19.95, right? $7,500, 19.95, right? So 22.98 minus 19.95 into 7,500 units. So 22,725 is the amount profit into 10% we have to deduct tax. Okay, M minus MRC, I'm getting it as 857,754 minus 1 lakh my initial investment divided by initial investment. I'll get holding period return as 757.75. Okay, for holding period, how much is it? Into 12 divided by 124. It is 73.33. It is the highest till now. 73.33 I'm getting. It is the highest till now. Okay, so on the third part, what it is saying there is that suggest the name of the investor with the highest effective yield per annum with the difference to his nearest investor. So 73 is the highest. What was the nearest? Nearest was your growth plan. Okay, minus 69.59. So a difference of 3.74% annually. Okay. Now question number 24 is quite good. Okay, it is a reverse calculation question. So we'll solve it. Measures Corpus and AMC on 1/4/2020 has floated two schemes, which is the dividend reinvestment plan and bonus plan. Okay. Mr. X, an investor, has invested in both schemes. The following details are given except the issue price are available. Okay. On 1/4/2020 it issued, but there is no issue price. Okay. Now how do we calculate it? We cannot calculate here. Alright. So, but end period is given. Okay. Additional detail is given here. That is the investment amount is given, but the NAV is not given, so we cannot find the units. So we cannot find dividend percentage also in the normal calculation. Next, average profit is given. Okay, average yield is given. Assuming the face value is 10 rupees. You are required to calculate the issue price of both the schemes as on 1/4/2020. Okay, issue price we have to calculate. So how do we calculate? We'll see. So what do we have in hand? It is 9,20,000. Okay. So if I have to calculate, and what we have profit here. Okay. So end value, how can we find it? It is end value will be what? It will be your investment value plus your profit. Okay, it will be your end value, right? So 9,20,000 plus 27,748.6. Wait a second. Sorry, this is average profit, right? Average profit means what? Average profit means your one period return. Okay, this is average profit means what? It is annual. Now we don't need annual, we need for how many years? 5 years. Okay, 31/3/2025. Okay, for 5 years, what is the total return? This is the average profit, 27,748.6 into 5. Okay, so this is my total profit plus my 9,20,000, right? So this will be my end period value. Okay, so what will be the units at the end period? It is how much? 49 divided by 49. 21,607 units I'm having at the end of the period. Now it is a normal question. Okay, we got units 21,607. Okay, now we have to do reverse calculation. Okay, now how do we do it? Now end period value 21,607 is equal to, let's assume the opening as X. Okay, now what is opening for it on 31/3/2025? For it, opening is 31/3/2024. Okay, so this value will be, let's suppose it is X. Okay, so how do we calculate? It is X plus, now it is dividend reinvestment plan. So how will it be? 15% into 10 into X, right, divided by your 45. Okay, is equal to how much? 21,607. Okay, like that if you do, we'll get the answer. So how are we getting? We'll see. Question number, oh man, question number 24 is here. See, X plus X into 10 into 15% divided by 45 is equal to 21,607. If you solve it, we'll get the answer. Okay, X is equal to 2910. Okay, like that for everything we have to do. Okay, we got this. By doing reverse calculation, we'll reach up to the starting period. Okay, So the starting period is how much? 20,000. Okay, 20,000 units has been received. What is the issue price? They have not given any flotation cost or entry value, so we'll take directly 20,000 divided by, so 9,20,000 divided by 20 is equal to rupees 46 is the issue price. Okay, just do reverse calculation. The first part was tricky. Okay, to get the dividend, it was tricky. Next, it is very much easy. Now see, average yield is in percentage is given here 6.4. Okay, into how many period? 5 period. Okay, 32%. So 10 lakh into 0.32 plus 10 lakh. So the end value is 13.3. So what will be my end value? It is divided by 44. So how many units? 30 units. Okay, so how do we calculate it? Is equal to 30,000. Okay, x plus, now how do we calculate this? It is x, let the units be x into 1 divided by 5, right? So it will be my units. So if I do it, I'll get the answer. Let's see how are we getting. See, bonus plan 30,000, a into 1 by 5. Okay, I'll take it as a, 5a. A is equal to 25,000. Okay, like that we have to calculate for everything. Okay, we'll get issue price as 50. It is very much easy. Okay, you just have to keep in mind the how to calculate this part and how to arrive at end units. Next, question number 25. Question number 25, 26, 27. Okay, it is all of same nature. Okay, one of the question number 26 was given November 24 exam also. Okay, a little bit twist was given there. Okay, it's a good question. So how do we solve it? We'll see. We'll do question number 25 and 27 is also easy only. We'll solve question number 25. Okay, so what it is, we'll see. Mr. X on 1/7/2022 during the initial offer of some mutual fund invested 10,000 units at face value of 10 for each unit. Okay, on 31/3/2023 the dividend declared by the mutual fund was 10%, and Mr. X found that his annualized yield was 153%. Okay, so how much is the holding period return? Now his annualized yield was 153. How much time did he hold it for? For 9 months. Okay, 1/7 it was issued. Okay, so it is 9 months. So 153 is for 12 months. Okay, into 9 divided by 12, right? So the actual period is how much? It is 115%. Okay, we'll take it as 115% is the holding period return. Now can we calculate it? Yes, just use d1 plus d1 plus p1 minus p0 divide by p0. We'll get the answer. So how much is it? We'll see. I solved each and every question. Actually, I'll show it to you. Question number 25, right? It's very much messy, so I'll show it to you in my fair work only. See, question number 25. So it is how much? 115. Okay, holding period return yield is equal to 115%. Okay, So how are we doing it? Holding period yield is equal to how much? We'll calculate. Okay, 115 into how much? 115%, right? 1 lakh into 115%. Okay, 115 is my yield. Okay, so what is my end value? My end value will be, I don't know. Okay, beginning I know 1 lakh, and beginning I know 1 lakh. So what is my holding period return? Okay, I'm not calculating in percentage. Okay, we are calculating in return only. So how will we calculate? If you want to calculate in percentage, we can do it also. Okay, end minus begin divided by begin divided by yield. Okay, so how do we do it? 1 lakh into 115%. It is 115 only. Okay, so end minus begin, end value will be how much? 115. Here it was in minus, right? So if it goes here, it will be plus. Okay, plus 1 lakh. So I'm getting it as 215. Okay, this is my end value. Now what they are asking in question is that what are the NAVs for 31/3/2023? Okay, for every year we have to calculate. Okay, for 31/3/2023, how much is the NAV? And divide by my total units. Okay, it was how much? 10,000 was the units, but what is the dividend was declared? No, it is actually a dividend reinvestment plan. It was missing in question, so we had to assume that. Okay, so how do we calculate? It is see. Now, how many units did we have in the beginning? 10,000. Okay, 10,000 units we had in the beginning. Okay, now how much was the dividend given? Dividend was given for 10%. Okay, into 10 into 10%. Now what will be the value? I don't know the value. Okay, now what is my value? I don't know. So see, 10,000 into rupees 10 divided by x is into x. Okay, 10,000 x. See, how are we calculating this is that number of units as on 31/3/2023 into my NAV as on 31/3/2023 is equal to my investment value at 21/3/2023, right? This is basic formula. Now let us assume this as x. Okay, NAV as on 31/3/2023. What is my number of units? My number of units will be how much? 10,000, that is my units, into 10,000 into 10 into 10% divided by x, right? I don't know x value. Now into my NAV, that is x. Okay, x got cancelled, and 1x I am having because we cross multiplied here. Okay, so it is 10,000 plus 10,000 x is equal to 215. X is equal to we'll get as 10,487. Okay, if you are finding this difficult, we can do it another way. See how we are doing it here is that dividend into P1 minus P0 divided by P0. Okay, so what is my dividend? It is 1. Okay, 10% into 10, 1 plus P1 I don't know, minus 10 divided by 10. Okay, into 115. I cross multiply it. Okay, I am getting this. Okay, you can use this formula also. Okay, you will get the answer as P1. Okay, so end units, how much are we having? It is 10,000 plus 10,000 divided by 20.5 is equal to end units. I am getting it as 10,487. This is one way. I understood this better than that, but that is good. Okay, that is actually what ICI need. So we have to use that formula. Okay, so learn this. So I'm getting it as 10,487. Now as on 31/3/2024, what is happening is that we are getting 20% dividend. Okay, So how will we account for it for NAV? Okay, we'll see. On 31/3/2024, what is the amount I'm having as on units? Earlier units it was 10,487 plus I'll have to calculate dividend. Okay, I don't have NAV, but I have this amount. Okay, end of the NAV I have, because here it was given that on 31/3/2025 Mr. X redeemed all his balance of 11,296 units when his annualized yield was 73.52. Okay, annualized yield at the end of the period was given here. Okay, so we can do it. We'll take it as X, and if we solve it, we'll get X as 25,092.95. Okay, and closing units is given in question. So for 31/3/2023, now the annualized yield is 73.3. Okay, this is annualized yield. Okay, for holding period, how much is it? We'll have to calculate. Okay, 73.52 is for annualized yield. What is the holding period yield? How much time did we hold it for? For 1/7/2022, 9 plus up to 2023 it was 9, 24 plus 12, okay, 25, it is another 12. So we held it for 33 months. Okay, so 73 is for the one period. So how much is it for 33 months? Okay, we have to calculate it. 73.52 into 33 divided by 12. Okay, it is 202.18. So I'm getting it as 202.18. Okay, holding period return is what? In percentage is what? End minus begin divided by begin. Okay, 202.18 end minus begin. So I'm getting end value as 302.180. 302.180. Now units into NAV at end. Units is how much? 11,292. NAV is not given. End value we know 302.180. NAV we get as 26.75. Okay. Using the same formula, we'll calculate one question from your this exam question. Okay, exam question. In exam question, there was a point given. Okay, I'll solve it by myself. Okay, we'll put a separate video for that. Okay, this was the whole question. 27 is also similar question. Okay, just figures have been changed. Okay, and here an extra point of capital gain is given. Here this also you have to distribute. Okay, this also is reinvested in the business. Okay, so only this point is given. It is very much easy. Just add it with the dividend, you'll get total units. Okay, Mr. X redeemed 6271 units is also given here. So this is also very much easy. So that's it for this part. Okay, now we'll see other topics. Okay, this is also very much easy. You can do it. 26 is your homework. Okay, 26 what they have given here is that they have directly given here holding period return for both the periods. So not annualized. So one step is deducted for you. Okay, same question here. Okay, same question, same figure. Now we have other topics here. So for that we have to look at the concept notes first. So what it is, we'll see. Evaluation of mutual fund. We have done evaluation of portfolio by using Markowitz, that is your Sharp, Trainer, Jensen Alpha. Okay, here also how do we calculate? Okay, how do we evaluate? The first one is your expense ratio. It indicates how much of the mutual funds assets are used towards operating expense. Okay, so how do we calculate expense ratio? It is total operating expenses of the mutual fund divided by your average return. Why we are taking average return here? Sorry, average net assets. Why average net assets? Because it is for the whole period, right? This expense will be divided for whole period. It will be incurred for whole period. Like let's suppose it was incurred on 31st May and then 30th September. Okay, for every period it will be. We cannot do for each and every period NAV. Okay, net assets. So we do it average for every period. That is opening net assets plus closing net assets divided by 2. Okay, average we do. Then we'll get expense ratio. Now what is tracking error? Tracking error is that every mutual fund has their own standards or benchmark. Okay, let's suppose it is taking Nifty as benchmark. Okay, and what they are doing is that they are saying that we are going to earn the same return as Nifty. Okay, now what we are trying here is that we are finding tracking error, that whether it is sticking to its words or not. Okay, whether there is deviation, okay, upside or downside, whether it is tracking correctly. Okay, upside is also tracking error, and downside is also tracking error. So what we are going to do is we are going to find deviation for it. So we are using this formula. Okay, it is your same as your portfolio chapters standard deviation formula. It is what? First we have to find D. Okay, D is what? Differential return. How do you find differential return? It is your actual return, that is your return on mutual fund, minus your benchmark return. Okay, so this is your difference. Okay, difference you have to calculate, and total we get summation of D, and this is your D. Okay, D is your one figure, and D bar is what? D bar is your summation D divided by N. Okay, D bar. Okay, why we are doing it square? Because this is variance. Okay, we are going to find variance. Okay, summation of D N minus N bar, N minus 1. Why is there 1 here? Because it is limited data. If limited data is given, that is sample data is given, we have to do N minus 1 only. If whole population is there, then we do N. Okay, but in portfolio chapter it is not followed. Okay, there we are taking it as whole population, here we are taking it as limited data, so we are doing it N minus 1. It is a rule of statistics. Okay, next we do square root of it, we'll get the answer. There is a example given here. It is very much easy. Okay, a return of mutual fund is given, return of benchmark is given. Okay, we take difference, we take summation of D divided by N. We are getting D bar, D minus D bar we are getting D minus D bar square summation divided by 5 minus 1. Okay, we are getting 2.272. We do square root and we are getting 1.507. Okay, return that the mutual fund should earn so that the investor will be indifferent on direct investment through stock market or indirect investment through mutual fund is our next topic. Okay, how we are going to calculate. Okay, let's suppose you are getting 10% return from market itself. Okay, if mutual fund is going to give the same return, okay, 10% only, no, it has to actually match with it. Okay, at least this person they have to match with it, but it has many expenses with it, that is the operating expenses, initial expenses, right? So how much should it earn? So it is return earned by investor in the market divided by 1 minus initial expenses plus your recurring expenses for every year. Okay, that we have to add it. Next, fee calculation of, this is basic maths. Okay, so you can do it. Next, fee calculation of hedge manager. Who is a hedge fund manager? Hedge fund manager is a person who runs a private fund. Okay, who runs a private fund, who takes funds from people, okay, and invests in market and gets high return. Okay, since this is private, it doesn't have to show it to other people or the public. Okay, he is having private fund. Okay, this is known as hedge fund. Here he is not restricted to the long term investment. He can do short term investment, or he can take he can trade in futures and options also. Okay, so that much freedom is given, and he has to give return to shareholders. Okay, his holders. So what he'll do, he'll charge a base fee, first fixed fee, that is fixed percentage on asset, that is portfolio. If a portfolio value is, let's suppose, 2 crores, he'll charge 2% of it. Okay, this is the basic fee. Next, incentive fee, that is, it is linked to performance of the fund. Okay, it is charged only if the value of portfolio increases above a particular level as decided in the contract, that is incentive fee on that excess value. Let's suppose there is an excess value beyond a certain limit, we have to calculate that part only. Okay, let's suppose after we are earning 25 crores, okay, and 21 uh, crores was the basic limit. Okay, that 4 crores into the incentive percentage which will be given in question, we'll take that percentage plus this percentage base fee. We'll get what? We'll get the fee of fund manager. Okay, so we'll see questions of it. It's very much easy. Okay, if you follow the concepts, you'll be able to solve it. Mr. A can earn return of how much? 16% from the market, okay, by investing on his own. Now he is considering a recently announced equity-based mutual fund which has initial expense of 5.5 and annual return of 1.5. How much should the mutual fund earn to provide Mr. A return of 16%? Okay, because it has also expenses, right? So what we'll do? 100 minus 1.5 divided by 100 divide equal to 16% plus 5.5. So it has to earn how much? Wait a second, there is some question. Wait. 16, sorry, 5.5, right? 100 minus 5.5 divided by 100. 16% he has to earn if he is not incurring any annual recurring expenses, but there is annual recurring expenses of 1.5 plus 1.5. So 18.43 has to earn, the mutual fund has to earn to provide a return of 16% to investor. Okay, just follow the concepts, you will be able to solve it. Question number 29 is same question. Okay, just figures are different, it is for homework. Question number 30 is easier, just follow the concept notes. So how is it? We'll see. A&P plan, a hedge fund, currently has assets of 20 crores. Okay, CAX, the manager of the fund, charges a fee of 10%, 0.10. Okay, so how much does he charge? 20 crores into 0.1%. He charges 0.02 crores. Okay, in addition to it, he charges incentive fee of 2%. Okay, 2%. The incentive will be linked to the gross return each year in excess of the portfolio maximum value since the inception of the fund. Okay, so now what they are saying is that he will get incentive of 2% if the portfolio reaches above the maximum value. Okay, excess since the inception of the fund. Since the inception of the fund, the maximum the share has reached is 21 lakhs. Okay, is how much the maximum value was reached was 21 crores. Okay, so if it goes above 21 crores, then he'll get incentive of 2%. Okay, so how are they trying to do it? You are required to compute the fee payable to CAX if the return on the fund this year turns out to be 29%. Okay, 29%. So 20 crores into plus 29%. So it is 25.8 minus my 21 was the maximum value. It was reached since the inception of the fund. So 4.8 into 2% is his share. Okay. Into how much crores? Into 1 crore. Okay, 9,60,000 plus earlier it was how much? 0.02 crores. That is 2 lakhs. Right. So he's getting a return of 11,60,000. Right, 11,60,000. If return is 29%. Now, if the return is 4%, how much should he get? Okay, so 20 crores plus 4.5%. It is 20.9 only. It is less than 21 crores, so he will not get incentive. He will get incentive of only 2 lakhs. Next, it is minus 1.8. Now, then also, how much will he get? He'll get his base fee as 2 lakh. Okay, he'll not get any incentive. Okay, 2 lakh only. Since return is minus, no incentive, only fixed fee of 2 lakh will be paid. Okay, so this was the practical portion of the mutual fund chapter. Okay, so hope you have understood everything. We have solved every question. Okay, so tata, bye bye.